All right. Well, we had CPI this morning, of course, biggest headline this morning. Did you watch the move? What are your thoughts?
I think it's a little bit of a head scratcher. I don't know. Like I was on with a bunch of the individuals from the Alpha team, and I'm pretty risk down after Friday, and I wasn't sure what to expect. And I guess at face value, it seemed a little hot, but then some were talking about like the hourly wages were a little lighter. And I just think there's a lot of hedging heading into it. There's a lot of sloppy trading right now. So, it's 8:42. I'm gonna let the dust settle a little bit. If you put a chart up at the spies up, we're kind of in the middle of the range, right? So it's really not that compelling. We had the high of 518 on Friday, the low of 508 yesterday. We're above yesterday's high of 512-ish. It's 514-ish. I'm going to just let the dust settle. As of Friday, I was on the highs of my month, my quarter, my high water mark. We rode the AI semis really well. We caught nice moves in the small caps, the bios, gold, Bitcoin. So I'm like, you know what? I'm taking a step back here because I could do that as an active trader because I don't know, what kind of rotation we're going to have here. Everyone's talking about how, the laggards of the Mag 7 and get better. The leaders are going to consolidate. Money's going to go here, there. For me, I didn't feel that smart. So, I'm not short and fighting it, but I'm also, not all in long. I'm going to wait to see how we feel a little bit after maybe the first hour of trading.
All right, and we're talking to Scott Redler again from T3 Trading. Scott's been coming on now a few times over the past couple months. Always great analysis, always great insights. And if you want to check out his free trading book, I threw that in the chat. Scott, do you mind telling us a little bit more about that book before we get into some other stocks?
Yeah, this is the Pro Earnings Gap Trading book. Basically, gaps tell you a lot about stocks. They tell you about potential direction moving forward, especially post earnings. Like usually you have some people take options into earnings. That's the only thing I ever do into earnings. Just so you know, one of my cardinal rules is you never take stock into earnings because you never know what's going to happen. If you think you know what's going to happen or you know what's going to happen, you're probably going to jail because that means you have inside information and no one has that. So what you should do is you take options into earnings. It could be calls, a call spread, puts, a put spreads. Never sell naked premium. So this way, if you're wrong, you lose a little bit. You stay involved, and then, but if you don't want to play something, then post earnings, a gap could tell you a lot about how to think about something moving forward. For instance, like let's say Oracle today, right? Let's if you could give, if I could present Oracle, for instance, here, okay. Let me press present.
You're stealing my next question, Scott. You're stealing my next question. I'm like, let's give him a live gap to go. Let's go. Let's see what you got on this Oracle gap.
See, great minds think alike, don't they? All right, so let's go to my chart. Did it go to Oracle?
Yep,
okay,
we got it.
So first, you had this lower gap, right? This was the last time they missed, okay? And they had no power to keep it below. So that was one gap, okay? And then you had another gap, post earnings, that kind of got filled to show that means nothing. So now moving forward, okay, which I just posted this chart, if you go to Oracle right now, if you look at the inside, it's up 14, right? So Oracle right now is at 128. So as an active trader, okay, if you took calls or a call spread into the print, you did well. I got to give Dan props from the Alpha team. He had a whole long strategy for Oracle. I wasn't interested. I didn't play it. Okay, I missed it. I'll live. These guys played it and made good money. After hours, you could have played it through the gap, 117. It filled fast. I remember when it reported last night, right after, I'm like, there's a quick gap to fill to 124 and change. It did. And then I'm like, we got to listen for the conference call, which was very bullish, to see whether or not it could take out 126, 127. So now here's Oracle at 128. So if Oracle gets above and stays above for today, then you have a big gap. And then what you could do is you take today's low tomorrow and you could be long that for a potential swing trade if it holds, because that means there's momentum, that means there's commitment, that means the institutions are there, and it could be a great trade post earnings if you didn't take it into earnings. So for today, for Oracle, I think this 126, 128 is really important. That's exactly where it is. It's like the market makers know, where they want to play with people. And then we see what happens from there. I can go over a lot of different other pro earnings gap plays that gave us really nice moves prior. You could do, let's see,
Which, Scott, before you move on from that,
Okay.
I just want to give just my perspective on this thing, and then you could
Sure.
add
Sorry.
comments at the top of that. No, I mean, I just look at this thing. I mean, I look at the all-time high in June of 23 at 127.54. I looked at you got up to this 127.50 area back in September, right? So to me, in that area, let's say above 25, 126, 127, you had institutional sellers, right? The big boys, those are the one that puts in those kind of tops. Then you saw the stock tumble back up to $100. I mean, I just can't think about resistance in this thing today. I mean, as far as getting up, to me, if this doesn't get up and take out the pre-market high today, I think you get to get this stock a lot cheaper. How you looking at the pre-market action juxtaposed with the monthlies?
Well, you have points of reference, like you said. Okay, it was rejected in June at 127.50. Then it was rejected in September at 126. So there were sellers there. But now, from 2023 all the way to March of 2024, I can't count, but that's like the 2 years of consolidation. That means other institutions were accumulating that entire time, right? So they're accumulating that entire time. It wasn't ready to go through there. They had to absorb. I think the last quarter wasn't great, and now all of a sudden, strong quarter, good guidance. So now, if it gets and stays above that level, okay, all these people are now in profits, and then potentially the base of buyers will make money. So that level is really important. If it doesn't stay above it, then there's more supply there, and it's just not ready to be prime time for additional gains. But this stock has not had a lot priced in because it's been in this range for so long. It's one thing if a stock has a major move prior to numbers, heading into the numbers, and then it, chances are it's going to sell off no matter what. But when you have a channel like you have here from June 2023 to here, that's a long time. You could actually even go to the weekly chart and probably see it even a little bit better. So here's a nice big channel in the weekly chart where it wasn't ready here, if you remember, because it went too far too fast, and then it wasn't even ready on this potential double top. But now we'll see, is this going to be a huge gap where nobody's allowed to buy it because it went through it? And can it now stay above this spot for additional gains, which I think for the market will be interesting, because if it doesn't, that's telling you that, hey, maybe there's no appetite for risk for big names like this to even make higher highs and continue, even with strong guidance. So that'll tell you, hey, maybe we're a little bit overbought in the overall in this season. You can't be a buyer and we come in. If it gets above and stays above and goes, that could breed confidence that maybe other names that haven't quite made all-time highs this year, have the possibility of doing so. So there's a lot of different ways to look at this. A, appetite for risk. B, for potential cash flow, if you can stay above this now and continue.
Scott, I mean, yesterday and Friday, we had some of our leaders so far of the year kind of look like they're potentially running out of steam. Carvana, Celsius Holdings, some of these stocks with some gaps down. Are you, NVIDIA, SMCI, you name it, are you close to calling a top on some of these hottest names, or do you think these are just healthy pullbacks?
Well, again, everyone loves a good call, right?
Right. That's why
on
you're
Friday,
here.
Okay, well,
I'm kidding.
I'm
not putting you on the spot.
No. Do I think that NVIDIA made an all-time high on Friday or a generational high? No. But do I think that yesterday is the generational buying opportunity? I don't know. You look at the chart here in NVIDIA, but big bearish engulfing candle. Well, all I know is that means get out of the way. It's no longer a swing trade. Now we'll tactically make some cash flow here. And I did so yesterday. I didn't take it into today because I don't take stock into a binary event, which was the CPI. If you look now, where is NVIDIA today? So NVIDIA is up 20 at 876. So it's not even at yesterday's high. I think it's going to take time to rebuild. I think that there will be a time when this makes a new high. I just don't know how long. And I'd be lying to you if I told you I did. And if I did tell you, then you wouldn't have me on anymore because I'm talking trash. Bottom line is, if you look at SMCI, everyone called the top on that, right? SMCI on February 16th, because it came so far. It had a big bearish engulfing candle, took 2 days to decline, then it rebuilt, and then, hey, it made a new high by 130 points, and that was probably 3 weeks later. So this big candle led to a rest, not the high in the year. So you got to think NVIDIA could do the same thing, but it needs to rebuild and take time, and you need to know how to approach it where, you know, you're not underwater and you can handle the days and the weeks of trading if you're too big either which way.
Got it. And I mean, how would you like? At what point? I see your moving averages on here and whatnot. At what point are you hopping in and buying this back on the long side?
Well, I rented it yesterday for a trade. I didn't take it home because I wasn't sure that 841 with the doji close is going to be the low. We could have had a really hot CPI. This thing could have been down 20 points. I am not looking to put this on as a swing trade right now. I'm looking to just day trade it until I see a bigger trend. We had a lot of swing trades on with this when it was here, when it broke above 505, when it was riding the 8-day up, or even post earnings. Remember, we talked about, oh, you want to talk about a gap? Okay, so here's a pro earnings gap right there. Took out 746. That was a big swing trade for us because we had defined risk. You could be long above 746. Then it stayed above the 8-day moving average all the way to Friday. So this was what you call a great swing trade. Right now, it's in price discovery phase. It's in, hey, you know, we're not sure what it's going to do. So as an active trader, you can't just say I'm going to be short or long here because it's not telling me enough yet. There's not enough price discovery. So there will be I will be trading it for a certain amount of time, and there'll be a time when, hey, I said, can this start a new active special sequence that's definable like it did on this day, which was February 22nd. As of right now, you know, if you want to be long versus 830, 841, be my guest. That's your defined risk. For me, I'm not yet, and I'm just gonna try and make money both ways. Who knows? It's opening up $20 today. We'll see if all of a sudden, you know, the futures come in and now they're like, oh, it was a hot CPI and it goes from green to red. That could happen too.
All right, we got time for about one more stock. I don't know if you've had time to chart this yet, but we had on report earnings this morning. Not great. You had a gap down there and on. What are your thoughts here?
My thoughts is, thank goodness we have a process, because I started to get long on cloud at 28. This was right here in February. Also bought $30 calls thinking it could have a pre-earnings move. Went to 35. I tweeted to the entire universe and to Portnoy, who I gave this play to at 28 because we were having a little bit of a fight, and he bought it. I bought it. We played options, went to 35 plus at 33.5. I said, I'm done with the stock. I don't take stock into earnings. I rolled up my calls from the 30s to the 33s, made over 100% on both. And then I said, you know what? If the report's going to be solid, I'll do a call spread. I did the 35-39s, risking $1.25 to make 275, and it's wrong. I'm going to lose on that, which I only risked a third. I'm not in the stock, and at this point, I'm just going to let it play out. It's gapping down. The guidance wasn't great, and you know, we'll see. Let it do some price discovery today. But it was just a play within 20 plays, and thank goodness we don't take stock into earnings and don't have predefined opinions, because again, if you thought you knew the earnings, chances are you're talking to people you shouldn't be talking to, and you probably go to jail over time.
Well,
so that's why we do options.
That's the process working out for you right there, not carrying it or not holding into earnings. I lied. We got time for one more quick one. Boeing. Do you have any charts on Boeing?
Boeing is a widowmaker. You know, it's just news. A door's going to blow off. A wheel's going to blow off. Chart's been very, very broken. But again, this is the process. Look when it was above the 8-day moving average from November all the way here. That was when it was in a strong trend. That was when I guess the news flow was good. And then now it's been below it the entire time. And I don't think it's worth the time. Listen, in 2 years from now, will Boeing probably be another all-time high because it is a quality name and everyone needs these planes and they're going to fix their problems? Yes, but as an active trader, I would just avoid it. It could be strong one day and then come out with news that, you know, that the windshield blew off and all of a sudden it's down $15. There's easier things out there than playing Boeing, you know, as an active trader.
Well, there you go. Again, we've been on the line with Scott Redler from T3 Trading. He's got that free trading book. Go check it out. I'm throwing that link in the chat one more time for some more great insights from Scott. Scott, thank you as always for hopping on Pre-Market Prep with us this morning.
Thanks for having me. And I'll leave you with one more thing, because you want sort of like, you know, a thought. A lot of people have been like kind of really, really negative on Apple, right? They've been saying Apple's done, the best days are behind it, they're not innovating, they're not this and not that. You know, I do think that, you know, the low that Apple made, you know, last week, you know, right here, this 168, could wind up being the low for the next few weeks. So I'm long a little Apple. I think you can put your stop in at 172 or 168, and we'll see if this starts a new active sequence into that June potential WWDC AI event, because everyone's saying it's over, but I just think it was a consolidation for a few months, and could wind up being a better place to be. I haven't been in Apple during the past 6 weeks, but just started looking at it a little bit closer. So maybe that's something that might be reacting better in the next few weeks.
There you go. Well, again, Scott, thanks for hopping on. We will catch up soon. Enjoy the rest of your trading day. Have a good Tuesday.
Thank you very much. Have a good one as well.
Thanks, Scott.
guys.
We'll talk to you
Appreciate it.
soon.